rightly said that it is being rightly said that waiting for perfect is never as smart as making progress. Taking learnings from the above saying, we, the Entrepreneurship and Incubation Cell of HR College, has come up with an engaging session on Angel Investing 101. In this session, we will come across all the various sources of fundings which startup gets and how their valuation progresses. Moving forward, I'd like to introduce Dr. Pooja Ramchandani ma'am, our esteemed principal, who has been a consistent support and guidance for all of us. Her constant encouragement has always inspired us to push our boundaries and achieve great things. Now, I would like to introduce our professor in charge, Dr. Naveen Punjabi sir. He is the vice principal at HR College of Commerce and Economics and is leading our committee at ESET. Dr. Naveen Punjabi sir is a compassionate academic who aspires to develop tomorrow's leaders. His personality has always pushed us as a committee as we strive to develop an entrepreneurial ecosystem. His compassion and compression are unrivaled. Requesting you to take the stage and speak a few words of encouragement to participants here.
Thank you so much for your kind words, my friend. Welcome, Anchal, to HR College virtually this time, and hopefully we would be happy to see you in person. My only suggestion to the students is please take entrepreneurship as your first choice. And given the age that you are at, I feel very jealous because if I was at your age and if I had to change only one thing going back in time, it definitely is and would be that I would love to be an entrepreneur. So my suggestion is that I'm sure Anchal will give you more ideas about it. But given a choice, personally, if I had to change one thing, I would love to be an entrepreneur in my college time or a campus entrepreneur. With this note, I'm not the expert speaker. Anchal is, and he has a lot many things to talk about angel investing.
Ask as
questions as possible, especially about funding and about taxation on these funding, about what's the trade-off between giving up your equity for that funding. Ask as many questions as possible because he will be able to give you his hands-on experience, and please learn from others' experience rather than you reinventing the wheel. With this note, I welcome Anchal Taatya to HR College virtually this time, and hopefully we look forward to meeting you soon in person. God bless you and all the best.
Thank you so much, Dr.
Thank you
Naveen.
so much, sir, for the kind and supportive words. Now, I would like to introduce to our guest speaker for today, Mr. Anchal Taatya, an IIM Ahmedabad alumni. He is the co-founder and CEO of Sparklehood. He's got the GC Mittal Award at IIM Ahmedabad itself, along with the Y Combinator SOS Award in 2019. His expertise in data analysis, social entrepreneurship, business strategy, and so on. His skills and immaculate knowledge would surely be fulfilling to all of us today. Hope you all like the session. Over to you, sir.
Cool. Do you guys want me to use a presentation or you want it to be more conversational? So I would request everyone to type in the chat box. You can either type PPT or you can type conversational.
So both ways work. So I guess how.
Okay, fine. I just want to hear what all the students are interested in. Okay. All right. Okay. All right. So let's do that. Let's do this. Maybe we do a mix of it. I think I have something. One sec. Do I have the screen sharing rights? Yeah, I do. All right, cool. Can you guys see?
Yes, sir.
Okay. There should be full screen mode. Okay. All right. So before I dive into the topic, again, one more question for everyone. Either you can type, or if someone is interested, they can even raise their hands and maybe the host can let them speak, or type in the chat window. I mean, I'm fine with either. Um, what is what do you understand by angel investing, or what does angel investing mean to you? It doesn't have to be a right answer. You can just say what angel investing means to you. Or what does the, when you hear the word angel investing, what do you understand from it?
So as like angel investment, I feel like is someone who is saving you for, or by giving you an investment. In a little ways, I can say that. So someone who's saving my startup by giving me money is an angel investor for me.
Okay.
Hello.
Yeah, please go ahead.
So according to me, Indian investors are wealthy investors focused on financing small businesses ventures in exchange for equity.
Okay. I mean, you're right. You're right. I mean, technically, you're right.
So what I feel is basically angel investing is when the investors invest in an idea, like the people who have idea, but they don't have funds to start the business. I think that is angel investing according to me.
Okay. All right, cool. Thank you, everyone, whoever gave the input. Second question is, why are you guys interested in angel investing? Again, you can raise your hand or type in the chat window. The host, I think if you can actually even read out some of the answers, if you feel like reading them, you should read out some of the answers, maybe for the next question. It's fine, not for the previous one, but for the new one, maybe you can. Okay, I'm not getting any answers for this. Okay. To expand our knowledge. Anyone else? No? All right, let's move on then. So first, see, an angel investor is not trying to save you. I mean, that's not his main intention. Nobody wants to lose money. They are not here to give money because it's not social entrepreneurship. Social entrepreneurship is something else. Nobody who gives you money is interested in saving you or in your idea. I mean, there might be a tiny bit of interest that like, okay, this idea excites me because I think it has potential. But it's very unlikely that there will be anyone who will say ki, oh, like, I don't care, you take my money and burn it. I just care about this idea, right? So in that case, you can understand that like, oh, purely they are interested in saving your startup or they're interested in your idea. But nobody is actually interested in saving your idea or running your idea or running your startup or being involved in it. That's the reality of the world. When people invest, they invest to get returns. They don't care ki aapka, I mean, they care, like the idea potential matters. Who is running the idea, what the idea is, how big the market size is, are you capable to run that business? Those things do matter. Because of that, that person might think that this might be a good investment for me, or maybe the risk is reduced, but they don't care about saving you. Don't think that. Like, please remove that from your head. Nobody's saving you, nobody's interested in your idea, nobody's interested in your startup. The world doesn't care. If I'm investing in your business, I'm investing because I want a return on my money. That's the only reason why I am investing. And you have to convince me as an angel investor why I should invest, why my money will get multiplied, and why are you the right person to multiply it. I am not trying to save you. I don't know you. Why would I save you? You have just met me. You probably cold emailed me, or you have found my number from someone else. You did a Google search. Why should I give you 10 lakhs to save you? I don't care. Right? The only thing I care about is multiplying my money, getting a ROI on my investment. That's the only thing I care about, right? So that's the main reason. And that thing is ensured by, I think someone gave a technical definition where she said that she invests and the investor gets equity in return. Equity is just a way to ensure that I have a legal right to my ownership. Right? And the ownership is essentially, I mean, a lot of factors considered, but essentially the amount of money I'm generally investing, my ownership will be some kind of multiple of that. Right? This is a standard presentation actually that we use for some of our master classes. Some of the things might not be very relevant for you guys. So that's fine. Excuse me for that. A brief introduction about Sparklehood. Right? So Sparklehood is a startup school for working professionals. We generally tend to focus on working professionals, not college students as much. The reason is purely, again, business. It's because working professionals have more money than college students, right? So they can pay more. So that's why as a market, we try to focus and target them. Not that college students do not have amazing ideas, not that college students have not formed amazing startups which have gone on to become billion-dollar unicorns. All of that is true, but as a business logic for us, we think that is a safer bet because of the domain knowledge of the person and the discipline and the work discipline and the amount of years of experience, right? So that's why we focus on that. Cool. How are we doing it? Now what we're doing it, when we initially started, we would do a lot of one-on-one for each of the founder and the entrepreneurs. So all the help that we provided them was extremely on one-on-one basis. It was really time consuming, not that scalable. So now we have moved on to launching different cohorts. And this actually enables us to even work with students now. A cohort is essentially a group of people who are interested in a similar topic or learning a similar topic. So now we have startup incubation, we have angel investors, we have a Web3 cohort which is coming, and we have a chief of staff cohort which is coming, right? And we will continue to launch more cohorts, maybe around quantum computing, maybe around different things, which we think is at the cusp of innovation. And like-minded people within those cohorts form a community. Initially, we train them with world operators for initially a couple of months, and then they work together as a community and help each other out. Right? We have helped so far 600 founders and investors. Overall, we have helped in a value creation of 500 million. This is about Sparklehood. These are some of the old startups you guys wouldn't know. That's fine. Now, what is a startup? Because we are on the topic of what is angel investing or angel investing 101. What is startup? A company that is trying to solve a problem where solution is not obvious and success is not guaranteed, right? So you have to, there is a very strong emphasis on not solve a problem. Every company is trying to solve some problem. Every business is trying to solve some problem. Koi na koi problem to hai, otherwise the business would not survive, right? People won't pay for your services or your product. A startup is slightly different in the sense that you're saying that the solution is not obvious is that most of the startups start with a founder forming a hypothesis. What is a hypothesis? A hypothesis is me as a founder, I observe my surroundings and my environment, and I form an understanding ki this is how my environment is functioning, and maybe this is a new behavior or a new trend or a new kind of problem which has emerged, and I think that is a good problem to solve, right? Generally all hypothesis kind of emerges like that, and then they get on with solving that problem. Now you have just identified the problem, you are not even sure ki jo solution hoga, is that a good solution, is that a bad solution, how efficient is it, can it be solved or not? You don't know any of these things right now in the beginning stage when you've just gotten an idea. An idea is basically just an hypothesis, correct? Success is not guaranteed because in business it's not as simple as making a business plan or a presentation. There are huge amounts of real life variables, right? 6 months back, there were so many startups which were $1 billion valued in cryptos. Now they've turned to ashes, right? That's just market condition. 6 months back, the founders or nobody in the world could have told them that you will fail. Like some of the players who were like extremely like leading names of the industry, they failed, right? Success is not guaranteed. There are certain things which just like you can't market conditions you can't tame, right? So even if you account for all the variables, you solve for all the problems, there are still some things which might not go in your favor, right? So as an angel investor, what you do, you try to reduce the risk, right? So we'll come back to that, how you try to reduce your risk. What is startup investing? Investing into the earliest investing rounds of a startup with the goal of getting back more money than you put in. So that this is fairly straightforward. You're putting in your money and you want a return on it, right? You will calculate your ROI.
Excuse me, sir. The screen
Yeah.
is frozen.
Sorry?
The screen is frozen.
What are you guys looking at right now? Do you see the startup investing screen?
Masterclass Angel Investing in Startups. That's the
Really?
first site, I guess.
Okay, how do I correct this? Because it's my screen is still on share though. Your screen sharing is paused. Okay.
So you can end the screen share and restart it if that's okay.
Sure, I'll try then. So someone should have told me before, yeah. I went on with the other slides. You guys didn't say anything. Thank you for pointing it out. Can you see it now?
Yes, sir.
All right, cool. I don't know what you guys missed. I mean, anyways, I think if you were listening, it should be fine. Right, startup investing. So investing into the earliest investment rounds of a startup with the goal of getting back money. So this is fairly straightforward. As I was telling you, they don't care about what your idea is, what your startup is. All I want is ROI, right? I'm putting my money in. And the thing with angel investing, one big difference is if you also look at, I think we'll cover that data later on. If you look at the return of the public markets and the return of VC investments or angel investors, not all of them, but the first quartile, the performers who are in the first quartile, top 25%, they have been constantly beating the returns that you get from public markets, right? And some of the reason, of course, is that the earlier you invest in a startup, the higher risk there is, so you get higher reward. This is what an investment cycle looks like. You guys can still see the screen?
Yes, sir.
Yes, sir.
Okay, cool. So this is what a startup investment cycle looks like, right? You, as I was saying, you will get the idea or a hypothesis, which is generally a combination of you observing your market, your environment and surroundings, and you figuring out a new kind of problem which has emerged, or a new kind of trend which you think you can use, or there are other kind of people who form certain different kind of startups, people who work for a lot of years in the industry in a very specific niche, right? Let's say someone is like a top-notch AI researcher, or someone is amongst like one of the very few people who are like really good at designing nano level semiconductors, right? So then those guys, they form their idea around on like how wherever they are operating, they already know that this is the limit of the current technology, and I can push the limitation in this way because I'm already at the forefront, right? So then there are certain kind of startups like that also, where actually those startups get much more valued. But a lot of startups that you guys might have seen on Shark Tank are generally like very derivative ideas. Derivative ideas in the sense that like there are a lot of e-commerce players already out there. You're doing one more e-commerce thing with like a slight variation in it, right? So when the market, when you read a lot of like high valuations at very, very early stages, it's not these e-commerce startups which are selling Maggie in a different way or doing delivery in a different way. Sometimes one or two exceptions might happen at very early stages. At early stages, the valuation where you will see very high are founders who have the right experience or the right team to solve the problem that they're trying to solve, right? And investors will bet more on them because I believe that that person has the right expertise to drive that business, right? So although everybody says that anyone can work on any idea, you can start any kind of startup in the world, while that is true, but there is a learning curve, right? If you have zero knowledge, let's say about space, and you say one day you wake up and you're like, I don't know, you think maybe it's just a very cool idea that I will launch micro satellites which will run on Android OS systems. You can do it, fine. There's nothing, no one who can say you can't do it, but you will probably take few years to get there, right? So you have to understand your limitations. It's not possible for everyone to do everything. So as a general advice, we tell entrepreneurs that you should try to play around your strength areas. Or agar strength nahi hai, then you try to find people who can complement you, but they have at least like a very, very strong background in that, right? So why I'm telling you all of these things is because these are things which investors take into account while deciding whether to invest or not, right? Just a very nice glossed uh, pitch deck with very nice graphics is not going to get you funding. There are a lot of other things which you need to take care of, right? So pre-seed round, this is the typical startup investment cycle. Usually people raise from friends and family, but as I said, there are certain people who are like very experienced, or they're trying to play around in their area of strength and they can demonstrate, or they have evidence to show why they're really good at that. Then in those cases, it's possible that you can actually get professional serial angel investors or even very qualified big VC funds to invest in your pre-seed rounds. And that does happen sometimes. And you might have read about it, but generally it does not happen for most people, right? So they tend to raise from friends and family. Then you have the seed round, which happens from angel investors. In India, typically it's in the range of 50 lakhs to 6 CR. In US market, it varies, but in India, that's typically the range. You will end up diluting anywhere from 5 to 30% in India. Different investors function differently. They might ask for different things. Then some things depend on how you as an entrepreneur negotiate the terms with your investor, right? Now this is growth stage. So what is different between pre-seed, seed and series A to X is that initially when you started, you just said ki mera ye idea hai and this is how I plan to build it. This is why I believe this is a good idea. This is why I believe it will run or I can run it, right? This is all bunch of claims from your side. There is no actual evidence or data for your business. Ki kitna business kara hai, how much revenue do you have, how much sales do you have, how much monthly growth do you have, what are your unit economics like, right? A lot of people try to make certain assumptions and create a financial projection based on those assumptions. You need that. It's good to show that you are well prepared. You have thought of all of these things, but every investor knows that everything that you put up there is bullshit. It's all made up. That it's not real. It's all made up, right? You change एक assumption change कर दोगे growth rate का 10% से 20% साल का revenue double हो जाएगा. Right? It's just Excel juggling. It doesn't have any real value, right? So when you pitch, you show these things to show your level of sincerity, but that you have thought of things in a detailed manner, and it offers a glimpse into how you think. But it's not what really convinces people कि Excel sheet पे लिखा हुआ है कि मैं इतना कमा लूंगा, because that number doesn't mean anything, right? So difference between seed investment and series A to X is that these businesses actually have data. They can show कि I have run for 1 year, this was the expense, these are the customers, this is what they really like, this is what they don't like, this is why we believe we should focus on this product or this market. Seed investment में तुम्हारे पास कुछ भी नहीं है, you have nothing, right? So because you have all of that data, the risk reduces as an investment, right? Also, you as a team, by the time you reach Series A, you have proven yourself as a team that we are capable enough to design a product, launch it in the market it, sell it, keep getting the customers again and again. You have done a lot of things. And a lot of these things, when you just make the PPT, from PPT to actually getting to that stage, is a lot of times it's not that easy, and most people underestimate how much effort sales, marketing, and distribution takes. This is one of the most common mistakes which most founders make. They tend to focus too much on the product or the feature or the functionality. They do not focus enough on the sales, marketing, and the distribution. अगर बेचोगे नहीं तो पैसा कैसे आएगा? उसी पे तो that is the whole game. You have to sell. And most founders end up spending too much time on just like the products and features, right? So just like some common things we observe, right? And exit stage is, so you have angel investors, you have institutional investors, VCs, funds. I'm sure, I don't know, actually, I'm not sure if you guys know how public markets work and what an IPO is. Do you guys know?
Yes, sir.
Okay. You have some basic
Yes,
idea. Okay.
Yes, sir.
Cool. So you have a basic idea, right? Public markets, I mean, is like the last bit of the journey, right? It's the last bit of the journey. Business mein jitna high growth tha, all of that has kind of like gotten over now. All high growth, most of the growth, development, all of those things are set. The team is really bulked up right now. It's really big. Now it's time for VCs and the funds to sell their story to the general market and get as much valuation as possible out of it, right? Nothing, I'm not saying all of these things in a negative manner, but that's what these guys have to do, right, to get an exit. All these people who believed in you as an entrepreneur, or if you are planning to be an investor, even if you do all of these things, even if you invest, a lot of these angel investors and VCs and funds, they also help and support their startups. Reason? Because I have already given you my money. So I have a skin in the game. If you fail, my investment becomes zero, right? So if you fail, my investment becomes zero. That is why I have a very deep skin in the game, and I will try to ensure, not just for IPO, but even at seed stage and series A to X, at every stage, I will try to ensure you are running your business in a good manner. There is good governance. You have access to the right investors in the next series. You have access to the right team or the talent who can help you. So these guys actually help you out in that because they have a skin in the game. So that is why if you get good angel investors, or if you get good institutional investors, these things tend to multiply what kind of things will happen in the future, because each of these guys are bringing their own network and their own expertise and the network of all the startups they have invested in together into that single investment with you. So these things also play a role, right? Moving on, startup investment, as I was saying again and again, it's most risky, right? Fixed deposit. I mean, I think these things are fairly straightforward. We shouldn't spend time on it. These things you are aware of: fixed deposit, mutual fund, stocks, startup investment. So startups investments are the riskiest asset possible, right? If you are risk averse, don't do it. Only invest the money. Only and only invest the money. कि think of it like burning your money. कि अगर वो जल गया तो कल सुबह मैं उठूंगा, मुझे कोई दुख नहीं होगा. I can move on with my day. It's like कि एक चाय पिया, चाय का कप गिर गया, and it's okay, I'll buy another cup of tea. So if you are okay not losing sleep over your investment, then only do startup investment. Otherwise, please don't do it. Also, another thing which is not mentioned here is startup investments. It takes a very, very long time for you to get the exit, any kind of exit, right? And for a liquid exit, kab aayega? Exit will come when there will be a liquidity event, right? Liquidity events kya hote hain? Liquidity events can happen when, if I am an angel investor, series A, B, C mein some other institutional fund comes in and they are like, I want to clean the cap table. Do you guys know what a cap table is? Bata do agar, like, write in the chat box. If you don't, I'll tell you some things.
No, sir.
Okay, so a cap table is nothing. It's a very simple document where it's mentioned ki who in the company holds how much equity or ownership of the company. That is it. It's nothing more than that, right? Kiske paas kitna ownership hai? It's basically a document of that. It can be made more complicated, but essentially it is that. You can have like rights associated, किसको किस type के shares दिए हैं, किसके साथ कैसा rights है, but at a very simple level, its cap table is essentially a list of what is the ownership of whom. Now, when institutional investors come, angel investors क्या होता है? When the actual investment happens, it's not कि one guy will come and say कि I will invest 3 CR, or I will invest 6 CR, or I will invest 1 CR. There will be a lot of small investors, 1 lakh, 2 lakh, 3 lakh, 4 lakh, 5 lakh, 1.5 lakh, 50,000, 3 lakh, right? So there will be a lot of investors. If you raise money from angel investors, it means कि आपके cap table पे हो सकता है you have 50 people, 100 people, even 200. I think the government restriction is actually, so also there are different ways. They can be directly on your cap table, or they cannot be directly on your cap table, but they all funded together into some other company or some other angel fund, and that fund invested in you, right? So agar tumhare cap table pe directly hoga, you will have a lot of angel investors, which also means as a duty or a responsibility towards your investors, you have more people to manage. पैसा दे करके वो सो तो नहीं गए, right? They will ask you कि क्या किया पैसे का, कैसा चल रहा business, right? So you're answerable to more people, right? From a technical legal point of view, I mean, legally all of this is correct, but as a practice, generally preferable not to have too many people on the cap table, because it just becomes too complicated to manage them. And the next thing that I was telling you guys, when in liquidity event, right? So in series A, B, C, next rounds, let's go to the previous slide maybe. Series A to B, C में angel investor को return या exit कब मिलेगा? When there's a liquidity event. Liquidity event कब होगा? When you have a new investor who's coming in. When the new investor is coming, they say कि यार there are too many angel investors. The cap table is looking very crowded. Let's clean it. तो छोटे छोटे इन्वेस्टर्स जो हैं, जिसका I don't know, someone is holding 0.0%, 0.1%, 0.2%. So clear out all those holdings and sell those shares to the VC, or maybe some part of that share to the VC. So जो angel investors हैं, उनको क्या हुआ? उनका share जब बिका to a VC or a fund in any of these subsequent rounds from series A to C, इट्स अ एग्जिट फॉर मी, क्योंकि मैंने अपना शेयर बेच दिया, जो भी उस राउंड का वैल्यूएशन था, जिस राउंड पे मैंने इन्वेस्ट किया था उसका जो वैल्यूएशन था वर्सेस जिस राउंड पे आई गॉट द एग्जिट, इसके बेसिस पे आई कैन कैलकुलेट हाउ मच एग्जिट आई गॉट, I mean how much return you got, right? So that is a liquidity event. When somebody else comes and buys the share and you are able to redeem your share, that is essentially a liquidity event. Now that can happen by an institutional investor, VC fund, or it can happen when you list on the IPO, or it can happen some other company buys you out. Okay, all of these forms of exits are possible. Okay, moving on. Now, as an angel investor, so I was telling कि if you want to lose money, if you want to sleep peacefully at night, also if you want to lose money, if you want to sleep peacefully at night, then invest whatever you are comfortable losing, right? So one of the ways when we were initially looking at that the success is not guaranteed and the solution is not obvious, right? We saw that. I think you guys didn't see the slide, but it was on the slide I was telling you. So for a startup, the solution is not obvious. Success is not guaranteed. So as an angel investor, how can you reduce your risk, right? So you do portfolio diversification. At the core, the idea is somewhat similar to stocks. I'm assuming because a lot of you guys are probably Fin guys or involved in Fin studies in some way or the other. So you're aware कि stocks में भी portfolio diversification कैसे होता है. The idea conceptually is somewhat similar. It's not that different, right? Now different people try to have different approaches around it. I'll tell you what they do. So for example, मान लो कि there is someone who has worked in fintech for a very long time, or someone who has worked in semiconductor industry for a very long time. So different people work in different places, right? And they develop expertise around that. Or someone has just like worked in e-commerce for a very, very long time. So they understand that industry very, very well. So what they say is कि what I will do is कि fintech में मैं 10 startup select करके 10 में 1-1 लाख डाल दूंगा, या सेमीकंडक्टर इंडस्ट्री में 5 या 10 में सेलेक्ट करके मैं 2-2 लाख डाल दूंगा, right? So different people formulate different strategies around how they want to manage it, but generally whatever your strength area or your expertise or your capability to understand or really judge. So मैं अगर fintech का बंदा हूँ, I might have a good capacity to understand the fintech startup really well because I understand the fintech market really well. Similarly, it will hold true for a semiconductor guy. He will know that industry really, really well, right? E-commerce वाला जो बंदा होगा, he will know that industry really, really well. Now, I'm not saying that the e-commerce guy will never invest in AI/ML startup. That's not what I'm saying. But generally, some people form strategies like this because it allows them to form a very holistic judgment of the startup कि ये सही problem solve कर रहा है नहीं कर रहा है. Is this even a real market gap? Should I invest in this or not? Right? Then some people, they have different strategies. What they say is कि I will maybe invest solely on the basis of the founder. Maybe I don't care about the startup, मतलब the industry, but I care ki how good is the founder. So they will really try to judge or like spend a lot of time, and none of these things like happen like very slowly, right? Even if you're an angel investor, you will evaluate like maybe 10 to 20 deals every month. 10 to 10, 20 deals every month you will evaluate. Over a period of time, you will decide slowly कि अच्छा इसमें मुझे invest करना चाहिए, इसमें नहीं invest करना चाहिए, इसमें मैं कर रहा हूँ तो क्यों नहीं कर रहा हूँ. Some other things which people do is कि let's say if I want to invest in an AI/ML startup, but I don't know anything about AI/ML. So what I will do is कि मेरा एक दोस्त है जिसको who is a director in Google for AI/ML or something like that, like an expert because of some reason, right? So he says कि अच्छा मैं अपने दोस्त को बुलाऊंगा and जब startup pitch करेगी, so he will be there with me and जो भी technical questions हैं he can ask, right? So जो भी risk है या knowledge gap है आपके assessment में, you try to bridge it or fill it somehow in one way or the other, right? So that's the core idea. So this is anyways part of the community. You keep learning from other people. Once you start investing, you meet more like-minded people. You attend a lot of pitches. You see how people ask questions. Also, like for example, आप अकेले किसी का pitch सुनोगे versus you're listening to a pitch in a group of 20 other investors, right? आप अकेले में भी 2 सवाल सोच सकते हो, but 20 people together will think of, I don't know, maybe 50 different questions, right? So it's always good because then you get like a more holistic view, or some things you might not have thought of, those things come up. This I was telling you before, right? If you look at the top quartile of the VCs or the angel investors, how the returns have changed in the recent years, right? So this is the return. In the red, you have return to people who purchase shares on IPO or after IPO. I'll just to ask again, you guys can still see my screen, correct? Okay, cool.
Yes.
Okay, cool. So in the red, sorry, I'm moving this picture thingy, so it's not making the whole thing visible to me, right? Okay. In the red, so you see the data from 1980 to 2004, from 2004 to 2013. Red में you have all these returns which happened during the IPO. इसके बाद का, if you look at the returns, it's all to the investors who came before IPO. So that trend has changed. अब ना, the cream is not left that much to squeeze at the IPO level, but that doesn't mean that the risk doesn't change for the angel investor, right? But it is true that you can actually get much more returns as an angel investor, but the game or the mystery is your ability to pick the right startups. That is the whole game. How do you pick the right startups? How do you formulate your strategy? How do you design your hypothesis? Why you believe that is a good hypothesis? So a lot of people write their own investment thesis, right? What is the investment thesis? Investment thesis is generally a list of macro trends and micro trends of why you believe that a certain industry or a segment or a certain type of companies or a certain type of problems is where good returns or like a windfall will happen in next 5 years, right? So I'll not get into the details of the investment hypothesis thesis, but it's not something just as an angel investor you form. It's a good practice. Not everybody forms it, but it is a very, very standard practice amongst all the institutional investors. So if any of you go in future to work with any VC firm or any PE firm, right, you will form an investment thesis if you get to like a, I think maybe at least like a principal level in the company. If you become a principal or a partner, then you will, on a regular basis, you will form the investment thesis for your firm. Analyst हो तो basic काम मिलेगा हल्का फुल्का research करने का, right? You will not be forming the main hypothesis behind thesis behind where the fund's money should go. That's generally formed by the senior people, but it's formed by them. It's how the industry function. It's a very, very good practice. So that is why we actually advise a lot of our angel investors who are present in the Sparklehood network or the community to form their own investment thesis, and we do spend some considerable time on it. Right. Moving on. Oh, it's investment thesis. Okay, anyway, so I told you guys why it's important. Again, risk appetite, told you guys. Deal flow, right? Another big thing is deal flow. See, now if you like every deal, one thing that a lot of people don't know is a lot of investment opportunities or some of the really, really good investment opportunities, they don't come to people, normal people. Why do you think that happens? Even if you want to invest in it, वो आपको पता ही नहीं चलेगा. You won't have access to that deal. Why do you think that happens? Anyone wants to take a stab, take a guess? Sure, ठीक है. Anyways, because we have very little time, I think we can't do that much discussion. So a lot of really, really good deals, they're very network driven, right? I told you initially कि तुम किससे पैसा ले रहे हो as an entrepreneur, as a founder. If you're really, really smart, you know कि किससे तुम पैसा ले रहे हो, that decides कि how the future success might look like. For I'll give you examples. Elon Musk is an angel investor in your startup. How do you think that will change things for you? Right? Let's say Peter Thiel is an angel investor in your startup. I'm just saying some really, really big names right now because you will recognize it. But there are a lot of like really good angel investors whose names you might not have heard, right? Or someone is, let's say, like a director of AI ML in Google and you take angel investment from them, right? So smart founders, they use this strategically. They don't take money from anyone. They take money from only people who don't just give money, but they bring their own network, they bring their own connections, and they can bring like highly other skilled people who might add value to your startup in different ways, product, sales, could be anything. Right? So there are a lot of really actually high quality deals which just don't come to normal people. So you need to be part of that circle in some way or the other. It's gated, right? It's a gated community. So for example, Kunal Shah, right? Cred. So Kunal Shah has access to a lot of high quality deals which you won't have access to. Or let's say Y Combinator. I don't know, some of you guys might have heard of Y Combinator. Y Combinator is a really, really good, world-renowned startup incubator. When they do a demo day, you can't go there. Nahi hai tumhe access. Why? Because you have to prove yourself to get entry there. Right? So you also need to, so a lot of like the battle is won on the basis of what kind of deal flow you have access to. I mean, maybe I could have not told you these things to you guys, but this is just like the market reality, right? So you have to be aware of it. So a lot of like very normal platforms, I think there is some platform called Tyke. उसपे the claim is कि तुम 4,000 रुपए, 5,000 रुपए, 3,000 रुपए इस टाइप पे इन्वेस्ट कर सकते हो as an angel investor. वहां पर जो डील आपको मिलेगा ना, those are deals which all the top people have passed. उन्होंने डिसाइड कर लिया नहीं इन्वेस्ट करने के लिए, इसलिए अब आपके पास आ रहा है. Right? Cool. So that's deal flow. That's how the market functions. Evaluation. So I think this I lead a lot of emphasis on already. Ki you should be capable of understanding the business, and that's where like some of your strength and knowledge, those things come into the picture. But there are ways to build the deal flow, right? Not everybody is built with things, right? Everybody starts from zero in their life, but there are ways to build it. But I mean, we don't have enough time to get into it. I think this is one of the pitch decks that we actually use. No, this is actually some of the questions that you should be asking when you're evaluating the startup. I think I've already covered some of these things before. You look at the market gap. A lot of VCs, for example, really focus on, is the market size very, very big that I can get a potentially outsized return, and then only they invest. Even if the startup is very, very good, but the market is really small, nahi invest karenge. So a lot of times when founders hear rejection, it's not just purely because of one reason. There are a lot of like multiple reasons at play. Right? Solution, how good the solution is, find target market customer, unit economics. Do you guys know what unit economics is? Okay. So in a very, very simple manner, you know कि मेरे कंपनी का टोटल रेवेन्यू कितना है, टोटल एक्सपेंसेस कितना है, एंड व्हाट यू डू इज यू से कि मैं इसको परसेंटेज बेसिस पे कन्वर्ट कर दूंगा कि ये कॉस्ट जो है मेरा, this I don't know, maybe let's say cost of goods production or COGS is I don't know 30%, something else is 10%, marketing is 15%. So unit economics is you arranging all of it on a scale of like 0 to 1 and saying this has this much contribution, this has this much contribution, this has this much contribution. So generally like it's a standard practice in pitch decks to show it on that scale, because as an investor then it's very easy for me to understand ki kiska kya contribution hai, kya kharcha hai, right? So that's unit economics. I'm trying to not tell you guys anything in jargon, and I'm also not very good at jargon. So I'm trying to tell you in like very simple format, which you can like relate to and understand. Current traction, your traction is essentially whenever you are investing, as on date, how many customers you have, and these things change for different businesses, right? So these things are different businesses in different segments, in different industries. Even investors actually generally have like benchmarks कि SaaS में अगर आप हो तो customer acquisition के लिए maybe 20% cost is good. It's fine. If it's 80%, okay, maybe it's bad, right? So there are benchmarks where investors look at, and there are benchmarks for different industries. And some of this data is available. A lot of it is actually not available out there, which like firms keep that data and they use it to assess the thing how healthy the business is, because they have benchmarked the industry based on their multiple conversations and data points from multiple startups and investments and a lot of databases. Everyone has some sort of database or like benchmark for different industries, and they use those sometimes to see how healthy the business is. And so current traction, like for different businesses, it changes, right? For example, let's say if it's a social media platform, right? So usme the kind of traction or the metric you focus on is very different from what, let's say, a company which is either e-commerce or which is trying to sell, let's just say, just soaps. So दोनों का जो metric होगा, the kind of metrics they track is very different, and this is also industry dependent and like business dependent. Don't have enough time to get into all of these details, but you need to be aware of these things also as an investor. ठीक है, competitive advantage, why the company believes that they're better suited to win. Either they have a very strong network, or they have a hidden IP, or some algorithm which others are not aware of, right? Or there is a particular reason why, because of which once the customer has come in, they will never leave that product. And you always try to then think what are other things which can break this startup or this company, and try to see to a reasonable degree how can you risk proof it. Founder background plays a very role at the initial stage. It matters what the founder background is, right? I told you guys initially at the beginning if someone has spent 10 years in semiconductor industry and then they're trying to build something in semiconductor industry, so it's very likely even at a pre-seed stage, it's possible that the valuation might be very high, right? So the founder background matters. It changes again from industry to industry. Cool. If you're an angel investor, once you invest, what do? पैसा फंस गया आपका, right? पैसा फंस गया, right? There's no other way out. So you help them win. That's the only way to succeed, right? Get a return. So different people, it's in your own self-interest. You make warm introductions for connection, for talent, for sales. It's again a function of you as an investor, what your expertise, knowledge, your network is. Basically, those kind of things you will do for your founder. I think we will just limit it to this much. And I actually don't have time. I have another call right now, so I will be moving out. So thank you so much, guys. I hope it was helpful. It was a pleasure speaking to you. I wish I could have spent more time.
Thank you so much, sir, for all the insightful information. So on the behalf of ESL, I would like to extend my heartfelt gratitude to our speaker, Mr. Anchal Taatya. Thank you for removing time from your busy schedule and enlightening us about the topic, sir. Firstly,
right, thank you so much. It was a pleasure and an honor.
Thank you so much, sir. There is a feedback form in the chat box. Please fill that for the session. And in the end,